In this video, we'll be going over macros and backtesting macros. So this orange line here is just going to be there so you can have a reference on where you're at in price. So when you see this orange line, you're going to be like, okay, that's the open. We're over here. You're just going to have an idea on where we're at. So this is somewhat important. Looking at this, you can see right here, this is 8:30 high impact news driver. Usually when you get 8:30 news, it will activate this macro here, which is the 1050 to 1110. A little more context that needs to be with that, but just understand that this is why this macro would pan out. It's because we had a large range here, and that causes a ripple that is better used over here. And what that means is, like, when you hear there's a large overnight session or there's a large range day yesterday, it's fractal. So if there's a large range here at 8:30 news, you can expect what would happen if this was London session. A large overnight, expect a choppy AM. In this case, large 8:30, expect a choppy going into the open. And then later in the day, it'll pick up and move. So that's why I'm saying if there's an 8:30 news driver, you can expect price to pick up around here and start spooling towards macros. That's free that I just gave you, no extra charge. But this is the depths it gets to in my Patreon down below. But I wanted to explain to you why this macro here, you would even be looking at this ahead of time before the day starts. Is if you have a high impact news driver, you can trade around here and catch these moves, or you can wait later in the session. Just a general rule. There's more context involved in that, but that's just a general rule. So as you can see here, we'll check out SMTs. See what we got. Certain times of the day you want to be looking for SMTs, and it's like, oh well, what day do I know? What time do I know? You know, again, it comes down to your news drivers and what you know as education, literacy. It comes down to that. That's on you if you want to pursue it in what ICT is teaching or not. That's on you. But the reason why I'm saying check for a macro here, it's not hindsight. It's because there's a news driver that took place at 8:30 leading to this macro. We already know from 9:30 to 10:30 there's a tendency of the high of the day or low of the day to be put in. That's why we're looking here. And how you know when to come to your chart is literacy. Once again, what do you know about the market? That's what it comes down to. So this is not hindsight cherry stuff. We trade this, but 1050 to 1110 mitigation block here with bias being lower. SMT here. With there being SMT here. So there's a lot of accumulation going on at this time of day, leading to this macro to go lower. This is case one. So you can see in this example, we have a pool here. Equities open is here, 9:30. Price pops up, raids, shifts. There's an SMT with YM right here. So as you can see, NQ nudged up one last time. YM just kept going lower. The reason why that's important and how you can trust an SMT with your macro is if that low and that low is your draw and you have an SMT going higher, that's a stop hunt. So when price breaks down and comes right back up into this volume imbalance, these wicks, that's a shorting opportunity down to there using time. The first element is time. So 950 to 1010 macro spooled price into liquidity. Prior to that, there was SMT and equities open had a clear run on stops using this order block to go lower. You can take the manipulation impulse from this high to that low and project it down. And start seeing key levels be hit. When you use your projection leg and you start projecting price down, you can look at this axis here and start going to whole numbers. It's a general rule. So in this case, 20. That's a big figure. So you can start going for whole objectives with your projections. Just a little trick. This would be case 2. This is a 350 to 410 macro. And ICT did tell you guys what macros were. I'm not going to be the one to reinvent the wheel. If you really want to know what macros are, follow his content. Don't type in the comments, oh, that these are not macros. You don't know what a macro is. Go watch his 2023 mentorship. Learn what a macro is. You know? So 350 to 410 macro. This one's a little funky. Looking at this liquidity up here, see how we have sell side there? Let's say you want this sell side, but you have price up here. Liquidity. This is where market inefficiency paradigm shift takes place. And what that means is if you want to go lower here in this objective down here, because you want this and you want that, you're not interested in buy side or hold runners to buy side. Market inefficiency paradigm is understanding you need a stop hunt that takes place before going lower. This is his core content month 1. This is what you're looking at, what he's talking about right here. Market inefficiency paradigm shift, thinking like a liquidity provider. This is core content month 1. A lot of people don't understand this. I promise you a lot of people don't understand this, or they'd be trading it. It's easy to talk about it, but to trade it is different, and to see it, because when prices, if I cut price back here like this, over here, and you don't see the right side of your chart, we'll just do it anyway. Like this. When people are in a scenario like this, they don't know what to think. That's what I'm talking about. And thinking like market inefficiency paradigm is, we like this low and we like this gap down here. We like that. So we want to go for that. But there's liquidity up here. I want to see this ran. Where the macro comes in is 350 to 410. We're in a time where price is likely to spool. We want to go lower because there's trend line. But I don't feel safe putting my stop up here. You shouldn't feel safe putting your stop up there. So you can take this macro and literally target people who are already on side going into liquidity. Once that fair value gap collapses like that, you can short. Now look, this is a breaker. Very simple logic. Now look, it gives you another chance off a fair value gap. We'll take this price leg and project it down. 1.5 standard deviations. And with a gap, you can also take this and go for 50. There's things that I've learned and done frequently over time that don't really go away. And one of them is every gap I have, fair value gap or anything, if it's over a certain amount of pips or ticks, I will automatically look for the 50. It's just a general rule. Like I always will go for that if it's over a certain amount of ticks or pips. So if anyone's ever wondering like, well, how do you know to go for 50 here? Or how do you know to do that? Literacy. You need to understand more about the market and context to do things like that. But 50% here is usually where I would target in a case like this. Let's take this and flip it so I can get my 2 standard deviation. 3, 2, cool. So yeah, this is how you can take liquidity off of a macro to go in your true direction. So it doesn't mean these people were wrong. So whoever was up here, doesn't mean they were wrong. They're right because they were looking at the right objective, which was sell side. If they put their stop loss up here, they were wrong. But if you had your stop loss up here, you were right. So if you usually get stopped out and price goes in your favor, don't think that that's bad. It's good. You're on side, but your stop loss was not in the right place. Looking at this example here, you see 8:30 news, stepped in, there's SMT here. SIBI with an SMT. The thing that's important right here is the fact that there is an SMT with a SIBI. This would be the entry. You put your stop loss above the swing high, allowing for a reclaimed SIBI. This would be another shorting opportunity using 930, which is your equities open, to go lower. This black line is buy side. So to put more body around this, there would be a run on buy side with an SMT, fair value gap after a shift. See? Swing low, buy side, shift, SIBI, reclaimed. Now we're at a time of day, which is 9:30, where we run on stops, or 8:30, where we run on stops, as you can see here. So using this time to get into there is key. And this all leads to the macro. Like I said, I'm putting this orange line here so you know where you're at in your 24 hours in a day. Like, that's why this is here, so you know where you are. The focus isn't here, even though I trade these. But the focus is the macros, because you can trade ahead of these, trusting they'll work in your favor. So 850 to 910 macro, SIBI, into sell side. Here is the 750 to 810 macro right there. Again, there's a pool. Here's the 930. Now you see where the 930 comes in, right? Where there's a reference. You're like, okay, well, 930 is all over here. We're trading over here. Yeah, you guys see. Now you know where you're at in the day. Another trick is every retracement, like from that low to that high, that low to this high, any pullback, this low to that high, you can always extend them down one standard deviation to 1.5 and get good levels. If you're in like all-time highs or all-time lows, you can do that. Or if you want to line it up with another objective. But as you can see here, accumulation, manipulation, distribution. There's an SMT at these highs. 750 to 810 macro. Short. Short. Using 930 to run for lower objectives. The key thing here, there's really two key components, and it's the sell side. This is what's really key. It's like anytime you see smooth like that, that is the draw. Just like here, this is smooth. That was the draw. This was the first thing that gave up the ghost, and then the second is the SMT. These two are going to be what you're going to use a lot if you know when to look for them. Everything I'm saying is in the Patreon below, but this is what's going to help you with a lot of your trade setups. Taking these two things and using them for your draw. This is the 750 to 810 macro.